Alright, hi everyone. Welcome to today's pre-market live analysis session brought to you by IC Markets. Right, hope you all had a great weekend. Right, so before we start today's session, let's take a quick look at the disclaimer. Right, please take note that this is marketing communication. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as you carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020 and 2021. Right. Before we dive into the charts and trading view, let's take a quick look at the calendar for this week. Right, there's quite a few things going on as well. We've got another two monetary policy announcements this week. It'll be the RBA on Tuesday and the Swiss National Bank on Thursday. And we've also got the US PCE price index coming up on Friday as well. Right, so you can see here it's pretty heavy calendar on Monday and Tuesday as well. Right, Monday we've got a bunch of flash manufacturing and services PMI data out, which is also going to be the flash composite as well, right? So we've got it for the individual countries such as France, Germany, the UK, and also at the EU level, and of course in the United States. And on Tuesday at 4:30 a.m. GMT, the RBA will release its monetary policy statement, where they are expected to maintain their cash rate once more at 4.35%. We also have Bank of Japan Governor Kazuo Ueda speaking as well. Remember, this press conference will follow the BOJ's BOJ's announcement last week. Remember, last Friday, the BOJ also had its own monetary policy announcement last Friday, where they kept interest rates on hold. Right, they didn't raise interest rates; they kept the key policy rate at 0.25%. We've also got inflation data out of Australia on Wednesday, 25th of September. And then on Thursday, we have the second central bank announcement of the week, the Swiss National Bank, which has already began cutting its key policy rate, is expected to do so for the third consecutive meeting. So they're looking to bring it down by another 25 basis points from 1.25% to 1%. Right, and that's going to be at 7:30 a.m. GMT on Thursday, 26th of September, and half an hour later, SNB Chairman Thomas Jordan will deliver his press conference as well. And after that, we've got US GDP, unemployment claims. We also have Federal Reserve Chairman Jerome Powell speaking, along with ECB President Christine Lagarde. And finally, on Friday, we've got GDP data out of Canada, and of course the PCE price index, right, which is another inflation metric that will be released on Friday, 27th of September at 12:30 p.m. GMT. Now, taking a closer look at the RBA cash rate, right, we can see that it's been sitting at 4.35% for the last, I believe, 2 or 3 meetings, and it looks like it's going to be for the last 6 meetings. Sorry, they've kept the cash rate on hold for the last 6 meetings, and they look like they're going to hold it at this level once again, right? The RBA is pretty much worried that inflation is still above the 2 to 3% target, while they are trying to remain vigilant to the upside risks, right? So hence, markets are expecting this central bank to hold rates once more, which could function as a near-term bullish catalyst for the Aussie on Tuesday. So take note of that. The Aussie may receive a nice near-term bullish catalyst on Tuesday should the RBA maintain its cash rate at 4.35% once more. Now, switching over to the Swiss National Bank on SNB, right, we can see they have already cut for 2 consecutive meetings, and they're very likely to cut for the third consecutive time, right? So they're going to cut it by another 25 basis points to bring it down to 1%, right? The SNB sees a significant decrease in underlying inflationary pressures and expecting moderate GDP growth, and also they're anticipating a slight rise in unemployment, all of which point to another uh, uh, rate cut as well. So you can see the contrast between the two central banks, right? The contrast in current outlook. And finally, we have the PCE price index, right? So we only have the forecast for the monthly, and that's for the core reading as well. We don't have any forecast yet for the annualized readings, but looking at the core reading, looking at the monthly reading, on the left we have headline PCE, on the right we have core PCE, right? Headline increased 0.2% month over month in July, while the core has remained relatively stable at 0.2%, right? So for August, we're seeing another, we're expecting another gain of 0.2% for the core PCE, right? So I think we can probably expect headline PCE to come in uh, at a relatively uh, similar growth. So that means the annualized readings are likely to remain relatively stable as well. So on the left, I have headline PCE on annualized basis. On the right, I have the core PCE. Core PCE has come in at 2.6% year over year, whereas headline PCE has remained at 2.5% year over year in July, right? So should we see the monthly readings come in at a similar rate of growth, right? 0.2% once more, we're quite likely to see further dissipation of inflationary pressures on an annualized basis as well. So this PCE reading could function as a potential bearish catalyst for the US dollar on Friday as well. Remember, this is right at the end of the week. All right, okay. All right, hi Nick, good to see you as well. All right, hi XD, great. Okay, yes, okay. Would you love to get a loaner on the XY? It's very bearish, but near support. Yes, definitely. We'll start off the analysis with the dollar index, and we'll take a look at gold as well, and of course we'll cover the majors as well. Yeah, definitely we'll be covering the Aussie as well. We've got the RBA coming up on Tuesday, and we'll take a look at dollar franc as well. Right, and of course, should there be any other requests for any other instruments, to drop them in the chat box early, right? I'll be more than happy to go through the analysis with you. But of course, let's start with the dollar index, right? Let's start with the dollar index. Just let me edit the color a little bit here. Right, okay, so we are on a daily time frame for the dollar index, right? And we can see, right, as Nick has pointed out, right, it has a right, okay, right. Thanks, Nick, and yeah, thanks, Nick, for everyone. Reminding everyone to smash the like button. And hi, Ryan, good to see you as well. Right, we'll definitely be looking at the cable and the Aussie, and of course, right, we're looking at Bitcoin and dollar franc as well by XD. All right, sure, awesome. Okay, right, as Nick has mentioned, right, the dollar and hang on, here we go. This is dollar index. Yep, the dollar index, right, is trading close to a significant support level that's at 100.61, and has bounced on this level several times. Right, take note, this support level is like a multi-swing low that has been in place since end of December 2023, right? Whereas the dollar index was falling sharply in the last couple of months of 2023. It finally found support around 100.60 before reversing to stage a very strong rebound, right? So once again, we've seen the dollar index stabilize around this level at the end of August, in the first week of September, and of course last week as well. We can see there were several attempts to break through this level, but it has failed thus far, right? Although we can see this wick here, which was on Wednesday, 18th of September, dropping as low as 100.21, but generally we can see that this level has functioned as a very strong support thus far, right? Right. So if not, we've had sort of a clean break on Wednesday, 18th of September, but there was no follow through, and we saw the dollar index reverse once more. So because of that, right, because of that, I feel the dollar index could potentially stage a slight rebound of this level here and rise towards the first support, right? This looks to be a very significant support level, right? And we've seen this multi-swing low at 100.61 being tested several times, but so far there's not been a clean break with continued momentum just yet, right? So I think we may see the dollar index maybe retrace a little bit higher, right? Maybe in the first couple of days retrace a little bit higher towards the pivot, which has been identified at 101.78. Right, hence I think that we may have a potential slight rebound in the dollar index, as maybe some of the bears, right, they might be exiting their positions as well. Remember, when the short traders exit their positions, right, it can cause mini rebound in this for the dollar index, right? So we may see the dollar index retrace a little bit higher and rise up towards this resistance level, which is a pivot at 101.78. We can see this pivot here. Dollar index has run into resistance several times on the 3rd of September, and of course as recently as a couple of weeks ago on Thursday, 12th of September as well, right? So this looks to be like a pretty strong resistance level. And of course I can even, in fact, right, if I look at it here, right, I can even stretch it all the way across here, right? The pivot is actually like a nice overlap resistance level, right? Because we see here previously at the end of December, right, mid-December of last year, we saw the dollar index stabilizing around this level, retracing a little higher before dropping through it, but then it functioned as resistance as well. So this creates a nice overlap resistance level, right? Is there 23% that I could use? Let's take a quick look. Right, no, we can't use the 23%, that's fine. But yeah, we can see that the pivot is a pretty decent overlap resistance level, and we may see the dollar index make a little retracement towards this pivot today, right? And higher up, there's a nice overlap resistance that's been in place since 4th of Jan, right? For the first week of Jan, or the first couple of weeks of Jan, 102.56 function as resistance. Then we see a nice swing low taking place on 8th of March, and we see another nice rebound as well on 5th of August and also on the 14th of August. This also creates a nice overlap level at 102.56, which we're using in the identification of the first resistance, right? And of course, we can see the dollar index continuing to trade underneath the bearish Ichimoku cloud, which highlights the bearish momentum, right? But despite that, we can expect some retracement to the upside as well, right? We can see here, we see nice retracements for the dollar index, like from 17th of July to 30th of July, a nice retracement to the upside. And of course here as well, 5th of August till the 8th of August, another nice retracement as well. So it looks like it could rebound a little bit higher. And take note, when we look at the dollar index from the end of August till now, and if you look at the dollar index from the end of August till now, it's actually just trading sideways, right? We are seeing sideways action with the lower bound at around 100.50 and the upper bound at around 101.90, right? So we can probably expect this sideways action to continue for the dollar index. So we are quite likely to see a retracement to the upside, maybe for the first couple of days, rising towards the pivot, especially if the dollar bears decide to exit their positions, right? Any short covering could stage a nice retracement for the dollar index to the upside, right? So if we're expecting dollar index to rise a little bit or bounce off the first support, then we can definitely expect currency pairs like the euro to perhaps pull back a little bit, right? So we can see now, right, we can see the currency pairs like the euro trading close to a swing high resistance, right? We see the euro running into nice swing high resistance here on Monday, 26th of August, dropping quite strongly, and it's hit this level once more last Wednesday as well. Last Wednesday on 18th of September. Right, so this pivot is a pretty strong level here. It's pretty strong swing high resistance. We could see the euro maybe rise a little bit closer to the pivot before staging a reversal and pulling back towards the first support at 1.1011. Right, 1.1011 is also another nice swing low support that has taken place on Wednesday, 11th of September, and it also has the presence of a 50% Fibonacci retracement, right? You can see that this retracement started from here, this swing low on the 1st of August, of course, and ending with the swing high. Oops, hang on, where's my 50% retracement? Yeah, and ending with the swing high on 26th of August, and you can see the 50% retracement sitting at 1.0989, slightly below the swing low support here that occurred on 11th of September. And for resistance, right, resistance for the euro sits at 1.1275. For that, we're going to have to zoom out a little bit and look at this swing high resistance here that occurred on 18 July 2023, right? This was a significant swing high resistance that occurred in mid-July of last year. with the euro rising as high as 1.1275. So this is how we've identified the first resistance, and we have a couple of Fibonacci levels that align close to this resistance swing high as well, right? So basically we have a Fibonacci confluence here. Fibonacci confluence simply means that you have more than one Fibonacci level at a particular price zone or a particular price point, right? So in this case we have the 127% extension level and the 61.8% projection level. So now how did we find these levels here? Right, for the projection we started a retracement from this swing high here on the 26th of August, going down to this swing low on the 11th of September. We can see the trend line capturing the market structure pretty well, and we can see the 127 extension sitting at 1.1256. We also have a Fibonacci projection. This projection was found starting from here, first point 1st of August, second point 26th of August, and ending with the swing low here on the 11th of September. We can see the 61.8% Fibonacci projection also aligning pretty close to this 127% extension and the swing high resistance that occurred in mid-July of 2023. So this is a strong resistance barrier at 1.1275. There's another swing high resistance at 1.1192, right? And of course we have the swing first support here at 1.1011, which is where the Ichimoku cloud sits as well, right? Remember, when the Ichimoku cloud is green in color, right, it's of course highlighting the bullish momentum, but at the same time, should we see any pullbacks towards this zone here, the Ichimoku cloud itself can function as a pretty good support zone itself, right? So these are the key levels for the euro for the daily time frame. Then let's take a look at pound as well, right? We'll take a look at the pound, the Aussie, and then we'll come to gold. Yes, that's right, Nick. Yeah, I think gold is could retrace a little bit lower as well, and especially if we see, right, the dollar index retrace a little bit higher, right? The dollar index retraces a little bit higher. That's quite likely to put downward pressure on gold prices as well. Right, so let's look at cable, right? We'll take a look at cable, the Aussie, and of course Bitcoin, dollar franc as well. Okay, so looking at the cable as well, right? Similar market structure to the euro, right? We're seeing a similar market structure, a swing high resistance at the end of August, swing low on mid-September, right? I would say pretty much around the same dates as well, right? See, it's nice swing low or overlap support level on 12th of September, and a swing high at the end of August as well, right? So quite similar market structure for this currency pair as well. Okay, so for cable, right, we can see it has broken out of a prior swing high resistance, right? It's broken out of a prior swing high resistance, right? This level also could be functioning as a potential support as well, maybe an intermediate support level here perhaps, right? Or maybe I could say this is going to be yeah, maybe this would be, okay, let's just see, this is the first yeah, perhaps maybe I'm quite inclined to label this as the first support. Remember, this was a swing high resistance that occurred on 27th of August, and we saw a nice bullish breakout take place, right? So perhaps I think I'm more inclined now, looking at this chart again, to identify the first support for the cable at 1.3260, right? So what was a prior swing high resistance could now potentially function as a pullback support. So that's, I think first support for the cable should be at 1.3260, right? I think that should be a better level to identify, right? Because the cable made a bullish breakout above this prior swing high resistance on 19th of September, and we saw that bullish momentum continue on Friday as well, right? So we can see, probably expect the cable to rise a little bit higher towards the pivot before staging a little pullback. Now, this pivot level here also has the presence of a Fibonacci extension at 161%. So we found this, of course, by running a retracement from here, 27th of August, going down to this swing low here on the 11th of September. We can see the trend line once again capturing the market structure pretty well in this downtrend, and we can see the 161 extension sitting at 1.3430. Now, if we also have a Fibonacci projection. This projection started from 0.1, 8th of August, going up to 0.2 on the 27th, and ending here on the Wednesday, 11th of September. We can see the 61% projection level aligning quite close to the pivot and the extension as well. So we have another Fibonacci confluence here, and we have the 100% projection sitting close to the first resistance as well. But let's zoom out, right? For the cable, let's zoom out. Okay, we can see we have to zoom out pretty far. And when you look at the pivot here, right, that's a pretty decent. I think this looks a little bit better on the weekly time frame. Right, if we look at the cable on the weekly time frame, right, yes, you see a nice like a resistance level here, like a nice sort of over resistance level here at 1.3395, and high up you see a nice swing high resistance as well at 1.3595, right? So you can see here previously the cable finding support on 24th of Jan 2022 and again on 31st of Jan 2022, right? A nice support area here, right, which could potentially function as resistance. Similarly, there's a nice swing high resistance here that occurred on 14th of February 2022, mid-February. So this is a swing high resistance at 1.3595. So you can see here for the cable, we had to switch to the weekly time frame to try and identify a suitable resistance level, because we can see this is a very strong move for this currency pair. Right, so switching back to the daily time frame, right? So these are the key levels for the cable. First support is at 1.3260, a pullback level, right? This was previously a swing high resistance where the bullish momentum has taken it out. So this is now potentially a pullback support level at 1.3260. Pivot is a resistance as well at 1.3395, which has is accompanied by a Fibonacci projection and a Fibonacci extension. And of course, the first resistance at 1.3595 is another swing high resistance that has the presence of 100% projection. All right, these are the key levels for cable. Let's take a look at dollar franc. Yeah, okay, let's look at dollar franc, because we've got SNB coming up as well, the Swiss National Bank coming up on Thursday, but they're likely to cut rates. So if they're going to cut rates, right, it's quite likely we can expect this currency pair to drop lower. Or sorry, to drop higher, right? Sorry, if the Swiss National Bank cuts its key policy rate, the franc is going to weaken, and we can expect dollar franc to rise a little bit higher. But again, it also depends on how strong the dollar bears are. Remember, the Swiss National Bank only makes its announcements on Thursday, which is 26th of September, right? So in the meantime, we can probably expect dollar franc to probably range sideways as well. If you look at it, dollar franc has been ranging between 0.84 of a franc and 0.8550, right, since end of August. So we're seeing sideways price action for this currency pair, and it's quite likely to continue as well. But as we approach Thursday and we see a nice rate cut by the S&P, that could fuel dollar franc, and it may even rise a little bit higher, right? It may break out of the upper bound here at 85.50 and perhaps rise a little bit higher on Thursday, should we see the S&P cut rates. So for now, maybe for the first couple of days or for the first half of the week, I think we can expect dollar franc to probably trade within this range once again, right, between 0.84 and 0.8550, right? This is something that's occurred since 27th of August, a nice sideways price action here, right? First support is pretty clear, right? This is a nice pullback level here, support level here at 0.8409, right? We see dollar franc bouncing off this level several times on 28th of August. Right, we see it making a swing low here on 28th of August, another swing low here on 6th of September, and another rebound here on the 18th as well. So this is like a nice multi-swing low support. And conversely, on the resistance side, we see a swing high resistance here on 2nd of September, and another swing high resistance on the 12th of September. And at the same time, of course, we see a nice 50% Fibonacci retracement aligned pretty close to this resistance barrier. And of course, dollar franc continues to trade underneath the bearish Ichimoku cloud as well. Right, so these are the key levels for dollar franc. Most likely we're going to see sideways price action for the first half of the week, and then come Thursday, with the S&P expected to cut rates once more, we could see the franc weaken, and that's quite likely going to function as a strong tailwind for dollar franc, and we can probably expect this currency pair to rise quite strongly on Thursday. Right, now let's take a look at the Aussie, because of course we've got the RBA coming up on Tuesday as well. Right, hi MyFX, hi yeah, good to see you as well, right? Thanks for tuning in, right? Okay, so similar market structure for the Aussie as well, right? If you compare it to cable and the euro, right? running into resistance on at the end of August and stabilizing in mid-September, right? So I believe this is a very similar market structure as well, right? Resistance here, end of August, nice swing high resistance. I would say like multi-swing high resistance here, and a swing low here in mid-September, right? And also, right, we can see that prior this was a nice multi-swing high resistance, right? This level first functioned as a swing high resistance on 11th of July, then another swing high resistance on 29th of August. So this creates a multi-swing high resistance, right? So similar to the cable as well, I think this multi-swing high resistance can now potentially function as support, right? A nice pullback support level. So I'm inclined to identify my first support at 67.96, right? This swing low is a nice swing low support as well, but something that's a little bit more relevant, I feel now, would be this pullback level here at 67.98. Right, remember this level here at 67.98, right, previously functioned as a swing high resistance on 12th of July, a second swing high resistance at the end of August, which now can potentially function as a pullback support, right? Hence, the first support is at 67.98. Right, looking at the pivot, right, the pivot is at 68.46. For that, we'll have to zoom out a little bit, and we can see this is a nice swing high resistance that occurred on 26th of December last year, right? A very nice swing high resistance taking place here. We see the market structure showing us a nice swing high on the 20th of December. We're identifying this level as the pivot, right? So we can probably expect the Aussie to rise up a little bit towards this level and probably pull back a little bit, right? So take note of that. And then just resistance, right? Resistance is slightly higher up and is another multi-swing high resistance, right? We see the first swing high resistance taking place on 16th of June 2023, and the next one taking place on 14th of July 2023. So this is a multi-swing high resistance, right? That's also accompanied by another Fibonacci confluence here. We have a Fibonacci confluence that's identified by the extension at 127% and the projection at 61.8%. So let's take a look at how we got those levels. Right. Right, so to find these levels, right, for the Fibonacci extension, this extension was found from here. This swing high on the 11th of July, going down to this swing low here on the 5th of August. We can see the trend line capturing the market structure pretty well, and that gives us an extension level at 0.6921, right? So that's how we found this Fibonacci extension level. To find the projection level, we started from here, first point here on 5th of August, going up to 0.2 on the 29th of August and ending at 0.3 on 11th of September, right? We can see the projection level is 61.8%, aligning quite close to the extension as well. So it's highlighting a strong resistance barrier for the Aussie at around 69 cents and above, right? So take note of that. So these are the key levels for the Aussie. And of course, should we see, okay, because we expected the RBA to be holding rates once more on Tuesday. So if we see them do that exactly, and of course we see a relatively hawkish statement, right, that's quite likely going to add further fuel for the Aussie, and we can expect it to rise up towards the pivot and maybe even break through the pivot as well, right? But at least for today, right, it looks like the Aussie is going to like just stabilize within under the pivot, right? Maybe, and then pull back a little bit, and then come Tuesday we may see a nice bullish momentum pick up, especially if you see a hawkish statement, right, that's going to accompany that potential rate hold as well, right? So these are the key levels for the Aussie. And let's take a look now at gold, right? We'll take a look at gold, and then we'll take a look at Bitcoin as well. There's a medium-sized news item have a significant impact in day one, right? Okay, medium-sized news, well, okay, if we look at the calendar, right, right, if you mean medium size, we define the medium sized news as those that's being highlighted by the orange folder, right? I would say these are medium sized news such as durable goods, Tokyo CPI, right? Speech by ECB President Christine Lagarde, and also the EU. This actually, I don't know why it's medium size. It technically should be a high impact, right? Because if you are seeing Germany and France PMI numbers being defined as a high impact, this should be the same as well. But okay, let's just look at your question, right? Medium size impact news events such as this, right, as highlighted in orange, are likely to have a pretty decent impact on the daily time frame as well, right? We can expect to see a noticeable impact on the daily time frame for those related currency pairs should we see a medium-sized event as those that are identified by the orange folders here. All right, okay, so where were we? We're going to go look at gold, right? All right, XD. Okay, we'll take a look at gold, then we'll take a look at Bitcoin, and then we'll take a look at Aussie yen as well. All right, so let's take a look at gold first. Right, why do I have this as a pivot? Right, I think this is a bit strange. Wait, how did I identify? Oh, wait, hang on a minute. Just give me a second while I identify this is 100%. Yes, okay, yeah. Okay, for some reason, why is this? Okay, sorry. This is first resistance actually highlighted here by this 100% projection. And I have a pivot here that's highlighted by another 100% projection, right? I'll come to that, how do we define that? And for the support, actually, okay, right. Okay, so I'll come to a bit as how I identified these projection levels, but let's start with the support. Right, actually there's a nice overlap support level here as well, right, at $2,469.71 per ounce, right? Why is that? Right, we see a nice uh, resistance previously, right? There's a swing high resistance that took place on in mid-July, another swing high resistance at the beginning of August, and resistance once more in mid-August as well. So this was previously a strong multi swing high resistance, which then proceeded to function as support on 22nd of August, and again on the 2nd and 3rd and 4th of September. So this creates a nice overlap level here. This is a nice overlap support at $2,469.71, right? So that's how we've identified the first support, and we can see gold rising up quite strongly towards this pivot level at $2,639.50. So how did we find this pivot level? Right, because we can see gold is trading close to all-time highs, right? It made a new intraday all-time high last Friday. This is a new intraday all-time high at $2,625.79. Right, this is a new intraday high that was formed last Friday, and we're seeing it approach a strong resistance, potential resistance area that's identified by this 100% Fibonacci projection. So to find that 100% Fibonacci projection, so this projection here, right, this 100% projection at $2,639.50 was found starting from with this 3 points. We started from here, point 1 on December 2015, going up to point 2 August of 2020, and ending at point 3, which is the lowest point here, September 2022. So you can see here this move in gold is really strong. This is a strong bullish extension, right? We see gold prices stabilizing at the end of October 2022 at around $1,630 per ounce, and since then it's staged a very nice bullish rise, right? Breaking through many resistance barriers as well, right? So we can see gold is really trading at extended levels, and to find and if it made a new intraday high last Friday, right, there's no other resistance level that we can identify. So in such scenarios, we have to rely on Fibonacci tools such as Fibonacci projections and Fibonacci extensions, right? We can't find any extensions at the current levels because they've all been exceeded, even on the monthly time frame. So we are relying on projection levels on the monthly time frame. So the first one here for the pivot was identified from December of 2015, going up to point 0.2 August of 2020 and ending at point 0.3 September of 2022. Now to find another resistance level, right, which is the first resistance at $2,716.33. This is another 100% Fibonacci projection, and that was found. Start going back all the way to starting point is, I believe, here August of 1999. So we started this projection from August of 1999, going up to point 2, which is this candle here, September of 2011, and ending at point 3, which is December 2015, right? And that's how we found this 100% projection, which we're using in identification of the first resistance at $2,716, right? So take note, gold is really trading at extended levels. It's getting harder to identify potential resistance barriers. For now, we have these 200% projection levels, really make it pretty challenging to identify the next subsequent resistance barriers. Okay, so let's come back to the daily time frame here. So now we know how we've identified these projection levels and why we're using it as the pivot and the first resistance. So once again, gold is trading close to its intraday all-time high. It made a new intraday all-time high last Friday at $2,625.79, right? So if you're expecting dollar index to like make a nice retracement to the upside, maybe for the first couple of days, dollar index is going to bounce off the first support once more and retrace a little bit higher. We can expect gold to be coming under a little bit of pressure as well. So that's why gold could potentially come close to this pivot level before staging a pullback, right? It may reverse off this pivot level and stage a pullback, especially if we see dollar index rising a little higher. All right, so these are the key levels for XAU USD. Right, hi Watson. Yeah, okay. When is Desmond going to be coming online? All right, I can check with him as well. I can check with the team and see when Desmond is going to be coming back online for this webinar series as well. Right. I'll definitely take a note of that and check on with the team, and let's see if we can get Desmond to come back on as well. Right, so these are the key levels for gold here, right? Really trading at extended levels, but we may see this precious metal pull back a little bit, right? Especially if we see, right, the dollar bears, if they start to close out their short trades, right, then we could see a potential short cover rally, right? So that means we could see dollar index probably retrace a little bit higher and try and aim towards the first pivot. As you can see here, it's been trading sideways since the end of August, between the first support and the pivot. All right, now let's move on over to Bitcoin, and then we have a request for Aussie yen. Right, so I think we've covered most of the requests so far, right? We've done dollar index, we've done gold, right? Nick wanted to have a look at those. Rand wanted to look at the cable and Aussie, we've done that, right? XD wants to look at Bitcoin and dollar franc, so we've done dollar franc. We'll take a look at Bitcoin, and then we'll take a look at Aussie yen as well. All right, okay, great. So now where was I? Bitcoin. Yep, let's head on over to Bitcoin. Right, so we can see here, right, although we're seeing nice swing highs and swing lows for this crypto coin, right? It's been pretty volatile as well, but actually if you look at it, it's just sort of ranging as well between $54,000 on the lower bound and about 64,000 as well. It's pretty wide range. It's a pretty wide range. It's been ranging between as well from 6th of August as well. So despite the nice swings, right, we see Bitcoin making a nice swing low here on 7th of September, a swing high resistance here on 24th of August, another swing low here on 5th of August, and another nice swing high here, or like a double top, right? This looks like a double top with the first top taking place on 22nd of July, the second one on the 29th of July, and another nice swing low here as well. So you can see this crypto has been swinging quite wildly, right? But it was also at the same time, if you look at it, it's pretty much just been ranging within these levels as well, right? It's been ranging, it's a pretty wide level, of course, right? It's been ranging approximately on the lower bound between $54,000 and on the upper bound at around $65,000. Right, so with that, we can see the pivot here at $64,350 is a swing high resistance that was formed on 24th, 25th of August, right? So we could potentially see Bitcoin run into resistance around this level once more, right? Not only this is a swing high resistance, it also has the presence of a 78.6% projection. So how do we find this projection? We started from here, 0.1, 5th of August, going up to 0.2, 25th of August, and ending at 0.3, which is 6th of September. Right, so we have the 78.6% projection level that aligns quite close to the swing high resistance here. So we have a strong barrier for the pivot here, a strong resistance barrier for the pivot, $64,300 and $65,000. Now higher up, right, this double resistance as well. That's also accompanied by a Fibonacci confluence. We have the 100% projection level, right? We can see here is this projection that we had used earlier, right? And we have a Fibonacci extension as well. So this extension was found from this swing high on 25th of August, going down to this swing low on the 6th of September. Right, so we have another nice Fibonacci confluence here to highlight another strong resistance zone. And of course, there's a nice like a pullback level taking place here. Bitcoin pullback for 3 days. It stabilized at around $58,000 before staging a nice rebound. I believe we could probably do a retracement as well on this uptrend. Let's start a retracement from here. This swing low on 6th of September going up to this high here. On the 20th, I believe is a 50% maybe that we can use. Right, yeah, we can see there's a 50% retracement around here as well to add further significance to this little pullback here that occurred on Monday and Tuesday, 16th, 17th of September here. Right, so we can see that Bitcoin is trading close to a swing high resistance that's accompanied by the 78.6% Fibonacci projection. So it's a pretty strong resistance barrier. So we could see price stall once more around this zone for Bitcoin. Right, and then let's look at Aussie Yen. Let's take a look at Aussie Yen. All right, let's take a look at Aussie Yen. Go Aussie Yen. Okay, all right, thanks Nick. All right, thanks, yeah, truly appreciate it. Yeah, thanks for reminding everyone to hit the to smash the like button as well on YouTube. Please do that as well, truly appreciate it. All right, so looking at Aussie Yen, right, we can see right, remember, as the yen strengthened significantly at the end of July, right, we had a combination of intervention measures by the Bank of Japan, right? We had a combination of intervention measures by the Bank of Japan the week of July, and of course on 31st of July we had interest rate announcement where the Bank of Japan raised its key policy rate as well. So they raised its key policy rate and announced a reduction in their bond buying program, all of which has functioned to strengthen the yen. So if the Japanese yen is strengthening significantly, then it's going to negatively impact the yen crosses, right? The yen crosses are going to fall. Remember, as the yen strengthens, it has a negative impact on the direction of the related currency pairs, right? So similarly, if you look at dollar yen as well, we are seeing a very similar market structure. Of course, right, this, remember, intervention measures around the third week of July and interest rate announcement on 31st of July when the Bank of Japan raised interest rates and announced a reduction in its bond buying program, all of which function to strengthen the Japanese yen, which causes the dollar yen to fall, and of course is going to cause Aussie yen as well to drop, right? So we are looking at pretty nice swing low support that has taken place here in mid-September, right? Pretty close to this swing low here that occurred on 5th of August, and we see a nice swing high resistance here on the 2nd of September as well, right? So we can see very nice swings taking place, support areas, resistance areas, and we can also run some Fibonacci retracements as well, right? Right, so in terms of support for Aussie yen, right, the first support is going to come in at around 93.64, right? This is a nice multi-swing low support, of course, right, taking place on 6th of August and in mid-September. Now, with price rising up, right, with this currency pair rising up, heading towards this swing high resistance here, we can identify this resistance level as our pivot, right? The pivot is at 99.75. Right, so if the Aussie yen continues to rise even higher, right, if it continues to rise even higher, we can use this pivot as a potential take profit target, right? So if we see the Aussie yen continue to rise higher, right, a nice take profit target can be identified at around the pivot level of 99.75. Now, we can also run a Fibonacci retracement on this large downtrend here, right, starting from this swing high on 11th of July, going down to this swing low here on the 5th of August. We can see that the 50% retracement aligns very well with the pivot, and actually if I were to just stretch all the pivot all the way back here, you can see this is actually a nice overlap level. This was previously support on 1st of May, slight support once more on 25th of July, and then resistance at the end of August, early September, creating a nice overlap level. So the pivot is actually a nice overlap resistance level at 99.92. That's also accompanied by a 50% Fibonacci retracement. Right, so we can probably expect Aussie yen to rise up towards this level here, towards the pivot, which can be identified as a potential take profit target. Right, for the long, if you have any long, it can be used as a potential take profit target. Now, what about the next resistance level? Right, there's a pretty decent pullback taking place here. Right, there's a nice support level taking place here on 4th and 5th of June. So what was previously a support level can now potentially function as resistance. So we're going to be using this level here, this pullback resistance level at 102.70 in the identification of the first resistance. Now this may also have a 61.8% retracement, or perhaps a 78.6. So let's check it out. Okay, 61 is here. And what about? Okay, so I think we can just keep 50 and 61, right? Okay, 61% doesn't really align very close to this pullback resistance, but I'm just going to keep it on as well, because usually 61.8% retracement, right, the golden ratio, can function as a pretty decent resistance area as well. So just keeping it on now as a reference. All right. Oops, what happened? What's going on? Okay, so looking at it here, right? All right, so these are the key levels. It's nice multi-swing low support at 93.64, a nice overlap resistance at 99.92, which has been identified as the pivot. It's also accompanied by a 50% retracement, and the first resistance, which is the pullback resistance at 102.70, that has the 61.8% retracement sitting slightly below it. All right, okay, so we've covered most of the currency pairs. Bitcoin, we've also covered gold. Let's take a look at XTI USD, and we'll wrap things up with the indices as well, right? So looking at XTI USD, this is the instrument that tracks crude oil futures, right? WTI crude oil futures, and we can see that although crude prices have been in a strong downtrend since the beginning of July, right? But we've seen strong retracements to the upside as well, right? We've seen XTI USD form a nice swing low support here in mid-September, another nice swing low support here August, Another swing low support on 6th of August, and another swing low here previously on 3rd of June. So what was previously a strong multi swing low support level can now potentially function as resistance here, right? So we actually have a nice pullback resistance level at $73.14 per barrel, which has been used as the which has been identified as the pivot. Right, so we can see although crude oil has been trading in a strong downtrend, as highlighted by the bearish Ichimoku cloud, we've seen very strong retracements to the upside. Right, we see a nice retracement to the upside take place here in the first and second week of in the first half of August. Another strong retracement to the upside taking place at the end of August as well, right? So despite a very strong downtrend, right, we've also seen very strong counter trend rallies as well. Most notably, the first couple of weeks of August, and of course at the end of August as well, and now currently as well over the last 10 days or so, last 10 trading days, we can also see a nice counter trend rally for XTI USD as well. Right, so we've identified the first support is a nice swing low here that occurred on 11th of September at $66.60. Overlap resistance, which is $73.40, which is the pivot, and this is also accompanied by a Fibonacci retracement at 61.8%. So if we started this retracement from here, 26th of August, going down to this swing down at 10th of September, we can see the 61.8% retracement sitting pretty close to the pivot level here, so identifying a strong resistance barrier. Right, so if you've been long on crude oil since last week, right, perhaps you've captured the nice swing low, of course, maybe not right off the exact bottom, but if you caught the reversal maybe on mid-September onwards, right, if you've got the nice reversal here, remember this pivot level, which is an overlap resistance that's accompanied no, sorry, it's a pullback resistance that's accompanied by the 61.8% retracement. Right, this zone here can be identified as a potential take profit zone. So for any long XTI USD traders, right, or long crude oil traders, identifying a potential take profit target at around the pivot or at around the 61.8% Fibonacci retracement is a pretty decent area to do so. And of course, this swing high resistance here at $78.08 per barrel is the first resistance, right? And I think I can also add in now. I think I see a pretty decent bearish channel as well. Let me see, where's my where do we go? Yeah, here we go. I think, right, we may see a pretty decent bearish channel. Okay, no, it's not really a nice bearish channel, but perhaps more of a descending trend line, right? This channel is not really good, but what I actually do see is probably a nice descending trend line as well. Right, so we can see here XTI USD as it was falling strongly since the second week of July, or since the first week of July, right? The counter trend rallies looks to have stalled at around the descending trend line, right? We see the counter trend rallies all stalling at this trend line here, 12th of July, 18th of July, 12th of August, the 26th of August, and it looks like another zone as well, right? We can see all the counter trend rallies being being restricted by this descending trend line. So we have the combination of the descending trend line, the pivot, and the 61.8% Fibonacci retracement, highlighting a strong resistance zone. Right? Remember, there's three factors that we are using. We've got the pullback support, which is the pivot at pullback resistance, which is the pivot at $73.14. We have the 61.8% Fibonacci retracement, and of course we have this descending trend line as well. And remember the bearish Ichimoku cloud when it's red in color, the cloud itself can also function as a potential resistance barrier. Right, so these are the key levels for XTI USD, right? This is a strong resistance barrier, so any long crude oil traders, right, you can probably identify your first take profit target, right, at around this pivot level here, which is the close to the 61.8% Fibonacci retracement. Right, now let's take a look at US 500. All right, XD, all right, thanks for tuning in and good night as well, right? Okay, before we end as well, right, I'm just going to quickly launch a poll. Truly appreciate it if you guys can give your feedback with regards to today's webinar. Alright, I've launched the poll as well, so please truly appreciate it if you guys can give your feedback as well. Yeah, and smash the like button as well, right? Okay, so with that, let's continue the analysis with US 500. Right, okay, so we can see US 500 is trading close to its intraday all-time high, right? It formed a new intraday all-time high here at 5,734, right? Right, so we could see it. Yeah, so this is a nice resistance barrier here. Actually, the pivot is already at the pivot here, so I think I would probably move the pivot a little bit higher, right, and use the intraday high itself, right? The intraday high here was formed at 5,734, right? So perhaps we could see equity market still push on a little bit higher, right? But this is a pretty strong resistance barrier that's identified by the 127% Fibonacci extension. Right, and to identify the next resistance barrier, right, we can see, of course, if it's trading close to intraday high, the next resistance barrier is going to be identified by a combination of Fibonacci extensions and projections. So we have the 161% extension sitting at 5,823. So these extension levels were found by running a retracement from here, this high on 3rd of September, going down to this low here on 6th of September. And also we have a Fibonacci projection at 61.8% that started from here, this low on 5th of August going up to 0.2, start of September and ending at 0.3, which is here on 6th of September, right? So actually, sorry, 61, there's a bit odd. Why did that projection end up like that? Okay, wait. There we go. Yeah. Right, okay, so we have two Fibonacci confluences that identify the pivot and resistance, so adding strong resistances, adding further significance to the strength of these resistance levels here. And for support is a nice overlap support level at 5,553, right? We see US 500 running the resistance here on 1st of August and finding support several times from 22nd of August till the 30th of August, right? These are the key levels for US 500. Alright, with that, thanks everyone for tuning in to today's session. Right, I'm not too sure what's wrong with the chat. I think something's up with my chat. Right, okay, let me just give this a quick refresh. All right, okay. All right, okay, okay. I can see the live chat now. Okay, it had just frozen up a little bit. Okay, before we end today's session, right? Just want to thank you all for tuning in, and also I'm going to launch a poll as well for those of on YouTube. Kindly appreciate it if you guys could give your feedback with regard to today's webinar. There we go. Right, yeah, thanks everyone for tuning in as well. As a take note, we've got two major central bank announcements, right? We've got, it's a pretty heavy calendar as well. So we've got the RBA up on Tuesday, 24th of September, where they will release their statement at 4:30 a.m. GMT time. They're expected to keep their cash rate on hold once more at 4.35%. And if we do see this hold take place and be accompanied by a hawkish statement, we can expect this announcement to have a pretty strong bullish catalyst for the Aussie, right? We may see the Aussie rise higher on Tuesday. Then we've also got a bunch of other data as well. We've got flash PMI data out of the EU at the EU level. We've also got it in Germany, France, and of course the UK, and also in America as well. We've also got several central bank chiefs speaking as well. Bank of Japan Governor Ueda on Tuesday. We also got Fed Chair Jerome Powell speaking on Thursday, as well as ECB President as well. And take note, on Thursday we've also got S&B policy rate announcement. Right, they are expected to cut their key policy rate from 1.25 to 1%. It's another 25 basis points cut. This is going to be the third consecutive reduction by the S&B. So we can expect the franc to come under significant selling pressures on Thursday. So that means we could potentially see dollar franc rise much higher as well. We've also got GDP data out of the US on Thursday, 12:30 p.m. GMT, and we've got PCE price index as well, right? This is the Federal Reserve's key measure of inflation, right? And should we see inflationary pressures dissipate further in the US, right, that's quite likely going to function as another bearish catalyst for the dollar as well. So take note, there's quite a few things going on, right? Two central bank announcements, several central bank chiefs speaking as well, and we've got inflation data out of the US, out of Tokyo, and PMI data as well. All right, so with that, we've come to the end of today's webinar, right? Thanks everyone for tuning in, and do look out for all upcoming webinars brought to you by IC Markets for the rest of this week, right? We've got a combination of live analysis and educational topics as well. All right, take care, have a great trading week, and catch you all at the next session.